Hello friends, welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Mastek, which could be a potential champion for the next 4 or 5 years. So let's understand about the business. Let's get started. First of all, disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Mastek, here's a small request. Can you support me on Patreon? And once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get a $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time. And also, if you can pay $100 upfront, get 10 months payment, then you get 1 year access by paying for 10 months, so that's a 16% discount. For detailed market or company talk or one-on-one discussion you want with me, you can directly email me and we can work things out with a fee. And also, if you cannot pay on Patreon, then you can join the YouTube membership. Now about the company. Established in 1982, Mastek provides digital services all across the board, and they provide digital solutions, enterprise services, and automation processes. Acquires Evosys to fuel its digital growth from 2020 onward. They acquired a huge company in Evosys, and their major businesses are agile consulting, application support and maintenance, digital commerce, application development, business intelligence, and assurance and testing. The market cap of the company is around 9,000 crores. If you look at the numbers, these are December quarter numbers. So sales went up by 30%, profit went up by 30%, which is quite strong. Virtually zero debt company. There's low promoter but decent institutional holding at around 18%. Return on equity of 25% and operating profit margin of 24% is pretty strong for the industry as well. So it is doing much better than the industry itself. If you look at the performance, then it has done exceedingly well in the last 1 year. The company has done very well. Stock has more than become 10x in the last 18 months. It has done extremely well over that period. Has been consolidating over the past few months, and over the past few months, it has been consolidating in a 500 point range between 2500 and 3000, and currently trading at the upper band, so probably on any declines towards 2800, 2900, it's a very good buy. It has been delivering very good growth on all fronts, and results have been strong. So we have seen results of being 30-35% profit growth in the stock. It is getting a number of large orders, which is also a very commendable thing, because if you look at it over a period of time, once these large orders gets executed, then these will culminate into very good profitability on the bottom line, and valuations are very attractive at the moment. Currently it is trading at 3 to 4 times sales, which is not very expensive. So why the surge in the stock in the last 18 months? Operational numbers have more than doubled over a period of time, and operating profit margin expanded from 14% to 21%. So there has been a major expansion in margins over a period of time. Technology is also in fashion in big time, and all IT stocks have come back into fashion. So what has happened is that their PE have expanded. So Mastek is no exception, and that's why the stock has gone up from 300 to 3000. At the moment, I won't say it is stretched, because it has been consolidating in this range for the last 6-8 months, and now I think it is ready for a huge up move going forward, 40 to 50% up move. Valuations are very reasonable right now at the start of the year, and right now also it has gone up a bit, 20% from the lows. But if you get it around 2800, those will be very good levels to get into something like a Mastek. Profits have grown nearly 90%, and ROE swelled over a period of time. So if you look at it, 18 months back, the valuations were so attractive that on a sales basis it was trading at 1 time sales, and on a PE basis it was trading at 18 to 20 times, which was pretty attractive compared to many companies trading at 25-30 times earnings, and currently even some of the IT companies are trading at 50-60 times. So this is trading at very interesting levels even now because of the kind of numbers that Mastek is producing, and more clients and better order book swelling valuations even further. So I believe the valuations went up because of the fact that they had more clients, because of the fact that operationally they did extremely well in a short period of time, and people then just got into the line to buy into the stock. If you look at the technicals of the stock, then it looks strong in a declining market. There's strong supports at the 2750, 2800 levels. So any 5 to 7% decline from these levels are very good levels to buy at. I think downside is maximum 10 to 15%, but the upside could be huge. At least 40 to 50% upside is expected over the next 18 months or so, and even more if things really fall in place. Very strong on long term charts, and breakout is expected above 3200 levels. It may continue to consolidate for a few weeks, but I think it looks like that it is setting up for a major breakout Mastic at the moment. So one can accumulate on major declines or at current levels. You can buy some at current levels and on declines. So one can keep on accumulating. In terms of numbers and fundamentals, all look good and can be a 20,000 crore market cap company going forward. Say in the next 2 to 3 years, you'll see the company being at 25,000 crore market cap. It may test your patience. This is how the stock moves. Stock do not move a lot, and when it moves big on either side. So that's how it will test your patience. Slightly volatile, and numbers need to be consistent, and numbers need to come in consistently for the stock to really perform. Put less than 5% of the total holding into such stocks, and remember to probably have a systematic investment into the stock. So what you can do is probably buy into the stock at around current levels, say 20 to 25%, and keep on buying on any declines. 100 rupee decline, you can keep on accumulating the stock, and over a period of a month and a half, you can accumulate the stock rather than buying in one go and then sitting on it, because the stock could go down 8 to 10% from current levels, and then you might be down say 10-12% rather than being up. So you need to slightly average out your investments over a period of time and then buy into the stock rather than probably buying into it in one go. That's the call, but it's a long term bet over a next 2 to 3 year period. I see it more than doubling in that time frame and doing extremely well. So have less than 5% exposure into such stocks, and numbers will improve. I'm hoping that with large orders coming through, I think numbers should improve going forward. So this was a video on Mastek. Please like and subscribe my channel, hit the bell icon so you get videos straight away when I post it, and kindly do support me on Patreon. Thanks a lot for watching.